We have a request to talk about exactly what is going on with this Activision, Blizzard, Vivendi, what's it called now? APAC, ASAC? I can't remember the name of the group, the Activision Stock Acquisition Corp or something. I'm watching Breaking Bad, and Schrader's title is ASAC, and I have that on the brain. Darn. You know, I wonder if I have the note here. I just threw the note away. Oh, it's got coffee on it. Anyway, we've gotten a request to do the Activision, Blizzard, Vivendi kind of stock deal. So let's kind of go through that. If you're not into numbers and financials and stuff, turn it off. This is going to bore the shit out of you. But if you actually are interested in why these companies exist and how they actually fund what they do, then it's going to be fascinating. So back in 2008, Activision merged its company into a subsidiary owned by Vivendi. Vivendi's a French company. They're a conglomerate. I can't even explain to you all the things they own, but they own Universal Music Group, among other things, and Maroc Telecom, and just a bunch of random stuff. So they had Vivendi Universal Games, and they actually created a special holding company, merged Activision into it, and at the end of the transaction, after the dust settled, Vivendi owned over 60% of Activision stock. When they did the deal, Activision shares were at about $13.75. Vivendi paid about $400 or $500 million for all of the Blizzard assets and Sierra assets. They may have invested another $300 or $400 million, so maybe $1 billion of investment. They got back the equivalent of 700 million shares of Activision at $13.75. You guys can do the math. That's $10 billion. $10 billion. It's a big number, 9.8 billion or something. Really big number. So they had a huge gain. They held the stock. Activision ran the company. The old Activision management team, Bobby Kotick, Brian Kelly, co-chairman, continued to run the company. Vivendi signed a 5-year agreement that they would do nothing. They wouldn't interfere, which they did not. That agreement expired on July 8th. So on July 9th, 2013, Vivendi was able to compel Activision to do something. Vivendi has 17 billion euros of debt. That's about 23 billion dollars of debt, something like that, 22, 23 billion. A lot. And they need cash. So they wanted somehow to sell their Activision stock. Activision was willing to take its cash on the balance sheet. So Activision had about $4.5 billion of cash. So they were willing to use some of that cash. They were willing to borrow money. I calculated they had about $5 billion of borrowing capacity. And they were willing to buy out Vivendi's shares. The way that they would do that, either they would buy it at a discount. So Activision stock had rallied up to about 15. They'd pay around, something less than 15. So let's just say they pay 14, and let's say that they were going to spend $7 billion. They could buy back 500 million shares at 14, or they could buy it at par at the $15 market price and buy a little less, or they could buy it at a premium. They could pay 16, and they could buy even less. Maybe spend $8 billion to get the 500 million shares. Well, obviously, Activision wanted to buy the shares back at a discount, and Vivendi wanted to sell them at a premium. So they had an impasse. They were kind of arguing about it. And the real big point was Activision couldn't raise enough money to buy out all 700 million of Vivendi's shares. So what they came up with was a structure where Activision bought back 429 million of the 700 million shares at a discount at $13.60, about a 10% discount to where the stock closed the day the transaction was announced. And then Activision's two co-chairmen, Bobby Kotick and Brian Kelly, put together an investment group that included Fidelity and Davis Select Advisors, two mutual fund clients of mine, and some other guys. And they bought another 172 million shares. So that kind of took Vivendi out to the tune of about 600 million or so of its shares, leaving Vivendi with just under 100 million shares that it has agreed after a year it's going to sell on the open market. So Vivendi is getting out of Activision stock. When Activision buys back 429 million shares, they're going to retire those. So Activision's share count went from 1.17 billion shares, so 1,170 million shares. It's going to go down by 429 million shares, so it's going to drop to around 750 million, 740 million shares. There'll be a little bit of share creep because they issue some options in this whole thing, and the share price moves around, which makes the options go up higher. But the point is, when you take Activision's earnings per share, if the earnings on top divided by share, if the number of shares is a lower number, and the earnings is a constant number, then earnings per share is actually a much higher number. So Activision was making about 80 cents per share before this transaction. They're making about $1.10 per share after the transaction. Because of that, Activision stock went up, and it's in the 17s now. So Activision bought its stock back at a discount. Nice deal for Activision. The share price went up. Good deal for Activision shareholders. Activision management participated in buying back even more stock. They have a giant stake in the company now, 172 million out of 750 million, let's call it. So 24% of the outstanding shares, something like that. So you've got insiders with a big chunk of the stock. They're going to stick around because they want that stock to go up. You've got fewer shares, so the remaining shareholders make more money because the stock price went up. You got Vivendi out, so Activision can do what it wants. The only bad news is Activision had to borrow $4.5 billion to get this deal done. So they went from having $4.5 billion of cash to having about $1.5 billion of what we call net debt, $4.5 billion of debt and $3 billion of cash they could use to repay the debt. They need the $3 billion, it's complicated, but for working capital and tax reasons, they have to have that cash. But Activision's going to be paying down debt for the next couple of years. In the meantime, they are independent from Vivendi, which means they can do whatever they need to do to run the company the way they think they should run it. I would not rule out an acquisition of a company like Take-Two in the future. Take-Two has a ton of owned intellectual property. They have really good franchises, really good developers, and if the acquiring company were willing to pay the developers what they're making now, I'm sure they would be happy to work for Bobby Kotick instead of for Strauss-Zelnick. So, I think that's a possibility. I don't think that's something that's going to happen imminently, but maybe in a year or two. So that's the story of Activision and Blizzard and Vivendi.